Happy New Year, traders. It is 8:01 a.m. Chicago time on Thursday, the 2nd of January, 2020. Thanks for joining me today. Wishing you all a fantastic New Year. Hopefully, you will achieve your trading goals this year, or at least see tremendous improvement to build upon. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning is opening up in a large gap up in the U.S. indices. We're seeing allocation to risk. We did close relatively strong on Tuesday afternoon. If you recall, the stock exchanges actually closed at 12 Central, 1 Eastern U.S. time, and the S&P continued to trade into the 4 o'clock Central close. So this rally actually happened without the participation of the equities. Essentially, once the equity guys left, the market was actually set up for a lower low and pushing value lower. I'll show you that in a minute. And then it took off to the upside. Now that was the year-end rebalance. We saw that Monday and Tuesday. Lots of selling on Monday, a little bit of selling on Tuesday, lower lows, lower highs. So we're coming in today with a large gap up in the S&Ps, currently trading at 3250 after pushing the all-time high, which was 3251 in the March contract. Current overnight high is 3251.75. There are some significant areas to monitor today. If you're a Convergent member, you would get those through the stock zone chart that I post every morning for ES, crude, and others. But it's looking like it may be a relatively active trade today. The leader of the pack, it is both leaders this morning on my futures quote board are the Euro stocks up quite a bit, up 52 points, 1.4%, and the DAX is up. Given that there was a holiday on Eurex, they don't operate the way we do. The DAX is up 0.92%. Am I mistaken in saying that the equities closed early? No, they didn't. No, I'm mistaken. That was a data error. Sorry about that. Okay, so that's great. It doesn't change the fact that that this rallied into the close relatively strong, but still put in a lower low, lower high with a lower value area and a lower point of control. It does change things a little bit in terms of expectations, knowing that the equities were open into the close and participated in this. I just reloaded my data to see that it's corrected. It's interesting, these exchanges just don't want to close anymore. Normally on the 31st you have half days in the equities. That hasn't happened in the last couple of years, but that's my mistake. Anyway, looking at, there's no point in me covering the prior, since I didn't do a trader bite on the 31st. The last 2 weeks, have been disjointed with the holidays. I'm really glad actually. That we're kicking off the year and the schedule goes back to normal. It's tough to read the market when there's so many interruptions in it. Looking at the overnight session and what has taken place on the calendar, there were quite a few releases out of Europe. The market manufacturing PMI came in relatively strong for the Eurozone at 46.3, forecast 45.9. The German market manufacturing PMI came in at 43.7 versus 43.4, and Great Britain came in at 47.5 versus 47.4. Those are all stronger across the board. Initial claims came in at 222,000, in line with expectations. We are expecting the U.S. market manufacturing PMI to come in 15 minutes after the open. Pay attention to that. Otherwise, the deck is clear for the rest of the day in terms of releases. Tomorrow uh, is likely to be, tomorrow is the first Friday of the month, and normally we would expect unemployment on the first Friday of the month, but according to the calendar I'm looking at, there isn't a release this week on unemployment. It's likely to come the following Friday, tomorrow, to wrap up the week. There are still several releases that are important across Europe, Great Britain, and then the U.S. will have construction spending, ISM manufacturing, and the EIA numbers coming out, as well as crude. FOMC minutes are due at 1 Central, 2 Eastern tomorrow as well. So that's where we stand. Let's take a look at what the market has accomplished so far. I'm going to pull this back to show what we've done so far. And as you can see, I've put in this micro composite around this area since the gap up on the 20th. Friday the 20th, since the gap up, we've been, we've had a pretty decent skew upwards, which we broke down out of on Monday. It looked like we had put in a pretty solid top. If you look at the all-time high, it opened just a couple ticks below the all-time high, pushed to 32.51 and dropped right off and held strong and lower into the close, extending the IB low lower. And then that was Friday the 27th. And on Monday the 30th, we test right up to the point of control. Don't quite touch it, we miss it by a tick, and then we drop pretty strong. It just looked like a profit taking into the end of the year. A pullback to mid right here, and then held sideways. Note that the IB high and the IB low were never broken. Remember, that's about a 2 to 2.7% historical probability in this product over 2,500 days. Trading days tested, a very rare occurrence, but there it is. On Monday, we had a very wide initial bounce, and the market could not challenge it. The bulk of value was in the same spot. The value area is valid from that day at 32.2775 to about 32.18 or so. And then the next day we opened just beneath and pushed right back up to this microcomposite point of control, and then sold off and put in a lower low. So let me clean this up. High, got a low, lower high, lower low, lower high initially, lower low, actually right here, and then we ended up still getting a lower high, lower low on the way this has set up. But the close was very strong. Look at the volume. The volume far exceeded the 20-day average for that bracket, for that 15-minute bracket, with a relatively strong delta. There's quite a bit of buying into the close. The point of control shifted lower, lower highs, lower lows, and it looks like in the overnight session the shorts were caught in a rush here, and we've basically pushed up through the most recent highs into new all-time highs in the overnight session. Here's what that looks like in the 24-hour session. So we have our close for New Year's Eve. We open a little bit higher, test down into the closing price, consolidate through the Asian session, and then as soon as Europe sets off, we are relatively strong. We start to move very strong in the direction of buying. We put in a high that's equal to the previous all-time highs, and then consolidate for a little bit before pushing that high a little more. Three distributions characterize the overnight action. The market's in price discovery mode. We do have a gap up in the really the most important thing that we need to remember for today is that we do have a big gap into new or around new all-time highs. And so this is the kind of day that actually creates an opportunity potentially early on, in my opinion, in that we get a very, very clear and early indication of whether the market is likely to rebalance by selling what's called responsive selling. In other words, they're responding. Remember, the most valuable price is down here. The most recent value area is right there. And if the market responds by selling, we get a pretty good idea of what to expect. But if the market opens and does not respond and starts to push away, this is one of those days where I would strongly suggest you keep your shorts non-existent, hopefully, unless you're very experienced, in which case you would put them on light and tight and just wait for your setups. Remember, if the market is initiative today, meaning moving away from prior value, in other words, buying, we're at new territory. We're at new territory, and we don't have very good reference areas above. I do have these stock zones up here, these stock zone areas up here, but these are based on a 32.57, 60, 70 and a quarter, 74 and a half. These are all measured move, mathematical based um, areas. And the key prices below us are 32, 43, 44. We'd want to see if they hold that area on a response. That could be the first area we would lean against to get long, and wait for the market to kind of take a bounce, then buy the pullback. I'm being very specific here. And then beneath there, the key level beneath there becomes 32.26, which is the point of control, this black line right here. This becomes the key balance area. If the market is not able to find buyers and becomes responsive, the first area of defense would be the 43, 44. If it's not able to hold that, we're likely to see this 26 in relatively short order. Let's take a look at the order flow for a minute. Let me just switch to that screen. So here's what we've done overnight. We opened in the new year, and we've had an upward skew, as you already saw. The liquidity in this market is just above us. The typical area is 32.50, was taken out early on right here, 32.50, and then we have a little bit of liquidity at 54 and a quarter, 57, which coincides with a measured move stock zone area, and then beneath this we have 32.40 and 32.46. The 43 is not showing much size, which this is the important area that the market is likely to test and hold. It's not showing much size, but we'll see how that changes. We'll see how this changes once we reopen. Once we open up, I want to see if it's able to get more liquidity in that area or not. So I'm going to be paying very particular attention to my zones today. There's this thing that's often said in our business. You got to be patient, right? You got to be patient. You got to be patient. But here's the catch: if you don't know what you're looking for, if you don't have a plan, if I don't have a plan for what I'm going to do once the market does what it's supposed to do, then there's no point in saying you got to be patient, because we don't know what we're being patient for. So make sure you're coming in with some sort of a plan before you trade, and that you're just standing by until the market gives you the information you need in order to take a calculated bet, and the risk for that bet is your stop. Okay, so let's get into the current expectations Let's slide this way over. What are we looking at here? So for today, the primary expectation, given the fact that it has pushed through quite a bit here, the primary expectation is an open that potentially tests lower just slightly. I talked about this 44 area and seeing if it'll hold, but it may not even give us that. As soon as it becomes initiative, I'm looking for any pullback, and I'm going to use my volume scope for that. This is the volume scope right here. I'm going to be looking for divergence on the sell side. In other words, I'm looking for a bar that may come down like this, but with delta not participating. In other words, I'm getting positive delta on a bar that's pushing lower, or I'm getting a relatively weak selling delta on a bar that's pushing lower to take a chance at a long and look for it to rotate up in the direction that is expected, right? So that's, again, a lot of detail there, but I'm looking for order flow in order to get in on the long if I'm participating on the long side. So open, look for it to potentially test lower, look for an impulse up, pull back, look for the pullback, and then likely to tangle at 57, 60, consolidate into the afternoon, and then potentially push into this 70 area potentially. The range is expected to be relatively wide. A lot of money is likely to come into the market. Today's the first day of the year. It is likely to be a relatively busy day as it was last year. Secondary, if we open up and immediately push up, consolidate, and then impulse lower. So I'm looking specifically for an expansion of the rotation down. Impulse lower, I'm going to look to sell small. So on a relative basis, we want to take the shorts light. The shorts, if they run, they could run quite a ways, but they're a higher risk trade, as I mentioned before. Look for the shorts light, expecting it to tangle with the 43, 44 area, consolidate here for a bit, and if it does let go, then I'm looking for 37, 38, and then potentially this 35. If it cannot hold these areas, the big area it's likely to test is down here, the 26. This is the big area that it's likely to test. I don't know if it'll get it today. It's quite a ways. Essentially, it'll have to drop about 30 points. But that is the area I'll be aiming for and looking for a runner on the short side. We're opening in a gap, so there's quite a high chance of imbalance coming into the market. And so there is a scenario 3 and a 4, open test down, drive up, open test up, drive down, and so on. I'll let you kind of sort that out. But the idea here is to have a plan and have identified areas that you're willing to respond in with defined risk once the market is open. Doing that sort of work once the market has already opened and is in action is really a futile attempt at planning your battle formation while the battle is ongoing and your men and women are getting slaughtered in the field. It doesn't work. So come in with the expectation that, hey, these are the key areas, these are the paths that may take place. We visualize what it looks like. This is just an exercise in visualization. We visualize what that's going to look like. However, the reality of the situation is what we respond to. I'm not imposing my will or expectations on the market ever. I'm open to long, short, sell, drive, buy drives. It doesn't matter. But I'm ready for whatever happens in case it does play out in the areas that I expect. I've already visualized the action and I'm ready to get into it without hesitation. Okay. So this year we're looking for persistent improvement, constant improvement. Every day we're improving on something. That is the theme for 2020. Just every day you're coming in here and you're working on something. Have you identified a weak spot? Have you identified an area that needs attention? And what are you doing to improve it? What are you doing to knock off an error or to improve on an area? If you're not doing that as you come in every day, it really is difficult to survive our learning curve. It's really, really important to come in with an attitude that today you may not make money. That's okay. You're coming in to improve incrementally. Okay. Good luck, and I'll catch you tomorrow morning. Take care.